me, Tarun Nangia, and a very, very interesting topic that we are going to take for today. It is the National Financial Reporting Authority notification circular, let me correct myself, that speak about additional responsibility on auditors for fraud. What is this all about? My panelists will share me. It is concerning chartered accountants. Why are they concerned? Is what we are going to discuss today. I have with me a very eminent panel today. Let me introduce to you S. Ravi. He is founder of Ravi Rajan and Company. He's a board member in many big corporates of India. Has also served as a chairman of Bombay Stock Exchange. Good to see you, Mr. Ravi, and looking forward to some interesting insights. I have with me Rakesh Nangia. He's founder of Nangia Anderson and was one of India's leading chartered accountancy and now consultancy firms also. Good to see you, Mr. Nangia, and looking forward to some interesting insights. Signil Satpathy, partner of Saraf and Partners, will give the legal angle to this issue. Good to see you, Signil, and looking forward to some interesting insights from you as well.
Yeah, hi.
At the outset, over to Mr. S. Ravi for a detailed introduction before we dive into the topic. Why are the chartered accountants concerned? And any suggestions on the circular?
So, the circular, first of all, is a forward-looking step because frauds have happened, and I think it is good and to prevent and eradicate frauds. And it's the circular has a good spirit generally, in the sense it's well-spirited. But why are the chartered accountants concerned? Because there are three reasons for it being concerned. Their concern is, what is the class of companies which will come into play? Companies Act itself has 2013 has put a lot of disclosures as far as fraud is concerned. LODR guideline also talks about fraud. And here the NFRA has put a circular which has larger implications because it does not do the materiality part of it. What is the material definition of a fraud? So even, for example, a petty cash theft or a petty cash fraud also can be a fraud. So I think this circular needs to be refined in some form so as to eradicate all sort of ambiguity that exists. So the chartered accountants are concerned because how to implement this, and what about potential sort of frauds which will happen, which are likely to happen, and which have been detected, which may not turn out to be frauds. So, there is various stages of a fraud, and the concern of most chartered accountants is, most of them, is how do we implement this circular? Of course, we can do and report everything, but it may create a lot of issues with rating agencies, with other people, other bankers. So I think that is where there is a lack of clarity, and that needs to be sorted out. That's my initial comment. The second point, which is equally important, is for example, there is a whistleblower policy. And whistleblower may not turn out to be a fraud, or it may just turn out to be just a whistleblower which is not there. So at which stage do the auditors come in? And so there are issues where I think there's lack of clarity, and maybe further clarification in this is imperative, in my view.
Point very well taken. We'll go to Rakesh Nangia for his opening comments on this circular.
Thank you, Tarun. Fraud per se, if you see, is taken very seriously by every stakeholder is concerned. So if you see NFRA, basically, where it deals with the listed companies and public interested entities, when you're dealing with the public money, or fraud in any way committed by anybody, whether it is an employee, whether it is an office of the company, whether a third person, has to be rightly dealt. There's no question about any leniency is concerned. That's I think we all of the same opinion. But what is the challenge here is that if we talk in terms of this particular circular, which you have mentioned about it, is that it has expanded a lot of scope, given some more, added few more things in it, which was not there in the past, has made it little bit, it could be, if it's just a beginning, basically, could be a little bit of challenging. And hence, we may request the government, basically, it should be suitably clarified. Who gets affected and who is not really to be worried about it. If you take this institution and NFRA is there from last 2018, from last 5 years now. And hence they deal with the complaints which they get it from the government. They deal with the complaints that they get it from the news, from any person, and they can just step into the shoes if caught, and they can issue your notice. And they have a complete wide power to ensure to adjudicate fraud is concerned. One of the issues concern is the definition of fraud. See, no one is wide. It could be somewhere subjective also. I think that only things which the more the clarity comes into that, either by some precedents or by more clarification coming in the law, will definitely be much, much more helpful. But I can tell you again, every stakeholder today in the environment, the business environment is there. Nobody tolerates fraud happening at any level is concerned, and has to be rightly and suitably done. But the manner of implementation, the mechanics of that is to see that a person who is guilty should be held basically guilty and be punished as per the law. A person who is guilty should not drag too much into the stretched definition of fraud, which exists in the law. And just to let you know, Tarun and my people who are reading, fraud reporting is in the statute from last 10 years. It is being reported. It is a part of a Caro report order. So you have to report. Auditor is supposed to report fraud in every form which is there in the Caro report. So it's nothing new, basically. It's an evolvement which needs to be talked, which needs to be deliberated, and where we need more clarification from the government. I think it will be helpful also. And I'm going to share my views as we go forward.
Thank you for this opening comment. I'll go to Snignil Satpathy, partner with Saraf & Partners, for his opening comment on this issue from the legal side.
Yeah, thank you, Tarun, and a very good evening to you and my fellow panelists. Tarun, I think Mr. Nangia actually raised a very important point, and which is something that we as lawyers sort of see playing out day in and day out. Fraud has an element of criminality involved. So it's a technical assessment, it's subjective, but the issue here is that fraud as is defined under the Companies Act and is as we understand it, it has some elements of criminality which typically an enforcement officer or a lawyer is trained to deal with. To place the burden now on statutory auditors to determine whether a suspicious transaction is fraud or not is extremely onerous to my mind. One of the critical things to also bear in mind is that, not all suspicious transactions can be fraudulent. Sometimes there are just poor commercial judgments when you enter into a commercial transaction. And that, I think, is the entire backdrop with which I at least personally have my issues with this particular notification and circular. Caro and reporting of fraud through various statutes, not just Companies Act, LODR, has already been there for some time where we are supposed to report such transactions. But the moment you place an obligation on an auditor to determine whether a suspicious transaction is fraud or not, you're essentially stepping into shoes of enforcement authorities. That's the first issue. The second thing to bear in mind is that why did the circular come out now? We have had this reporting structure for some time now, and since 2018 we have had this National Financial Reporting Authority. But it's essentially because of what we saw in the companies like Go Mechanic, Byju's, where statutory auditors resigned. Now, the resignation of statutory auditors, I think the regulators need to understand is not necessarily because they have identified fraud and therefore they want to resign. It could be for a variety of reasons, including perhaps the most popular one that we see is that they are not receiving cooperation in the documentation that they're seeking from the company. Now, that is something which I would want to sort of touch upon and deal with as we go further.
Thank you for that introduction, Snignil. I'll go to Mr. S. Ravi. I'll take it from what Mr. Snignil Satpathy said. Are chartered accountants liable to go into every transaction and see the minutiae of it? Can you go into this? I mean, how difficult will it become if we hold them liable for each payment made by the company? And what if he's acquitted later?
So, Mr. Satpathy raised a very good point about the larger definition of fraud. First of all, the definition of fraud is a very wide definition. That's the first point that I would like to say. The point that you raised about how to go about it, I would say that the biggest challenge as far as we are concerned, as far as auditors are concerned, is there is no standard operating practice for this. Where is the standard operating practice? When do we report? We are already, Companies Act, LODR, everybody has put us on, we have to report everything. Now the challenge is, when do we report this? What is the standard operating practice? And why this has happened at this point of time? And regarding auditor's resignation, I must tell you, the liability of an auditor, even if they resign, does not stop. It is still there, and there are many judgments to this for this. So the liability doesn't stop. Here, what is important is how to recognize a fraud, how to eliminate a fraud, or how to see that the system, there is no fraudulent activity that goes on. But by sheer reporting, and what should be reported, because the threshold level in Companies Act is 1 crore and above. So, but here what is happening, you're reporting everything. And how do you do this? What will be the impact on the rating agencies if they take even the smallest of frauds and report? What will be the reporting this thing? And then NFRA does place the responsibility on the auditors. Do we go into all transactions? We try to give a true and fair view. And frauds are basically detected by the management in day-to-day operations. If there is a petty cash that has gone wrong somewhere, I think there are various departments in an organization coming to the question, and they report the fraud to the management. And the management in turn, we through the audit process also recognize that fraud. So there is a process of recognizing. Then there is IFC, which looks at systems and controls. And the systems and controls are seen by the auditors and they're certified. So there are various levels of checking that happens. And it is not possible for an auditor to look at a fraudulent transaction unless it is evident through systems and control, or if it comes through some mechanism. But if it is hidden, and we have to understand one thing, the difference between a forensic auditor and a statutory auditor is something different. A forensic auditor will have the benefit of hindsight when he goes and looks into the account 3 years later and detects something as a fraud. But we have related party transactions, we can see that. We have systems and controls, we can see that. We can see the cash balances, we can see the bank statement. But suppose bankers are allowing a few transactions to take place, it is with their knowledge. So, and there is a credit rating agency which looks into it. So there is a whole lot of system. And just to place the whole responsibility on auditors is going to be very difficult. And we got to distinguish between forensic audit and statutory audit, which only looks at true and fair statement. And we should look at sort of eradicating this. The auditors have this responsibility. But I think we are here, this is an outreach in my view, where without an SOP, without any material impact, it's very difficult for the auditors to report this in the fashion that they are expected to do.
Point well taken. I'll take this question to Mr. Rakesh Nangia. Acquittals we have seen many times after great frauds. When we see acquittals, we are not surprised. We've seen many acquittals in the past 2 decades. Secondly, if you report everything, how much of data will you generate? Will you dump data on the government every day?
So I will take you a little, rewind it for a minute. This circular which came in the last week of June, basically, it talks the first on a responsibility of an auditor to report any offense of fraud which has been committed, and is supposed to report by the employees or by the officer of the company, on the officer of the company, beyond a certain threshold. Then his first job is to report that. That's the first thing. But the second, the biggest challenge that comes, where the auditor have directly or indirectly, in a fraudulent manner, abated or colluded in any fraud in relation to the company or director of them, then he can be subject to penal action, which can be, he can be debarred or he can be removed from his institute for the period of 5 years. And there's certain other penal consequences which is mentioned in the relevant section is concerned. Where the concern comes here, what is fraud? How do you define fraud? Then it comes to second level. When you convict him, basically, which you rightly mentioned, and he gets acquitted, and why it can happen? See the wide definition of fraud. It means any body corporate includes an act of omission, concealment, abuse of position, which have been committed with the intent to deceive, to gain any advantage or injure the interest of a person. So the definition becomes so wide, you can drag into anybody basically who is responsible for that. I think very important part which I would like to add, which Mr. Ravi touched it, auditor is not a forensic guy. And I must tell you, the forensic starts when the audit ends. And as an auditor, these are the specialized function, and an auditor cannot go beyond the normal audit function, and he cannot be a forensic auditor. And I tell you a very interesting thing, which is written in this circular also. It says that the auditor shall maintain professional skepticism throughout the audit, and recognizing the possibility that a material misstatement due to the fraud could exist. Now here you tell him you do the audit as a forensic. And rightly, which you mentioned it, think of our conglomerates today, Tarun. Today the conglomerates capitalization is more than 50% of the GDP of the world is concerned. How can you expect to do an audit where you can say these are small, you only do on the basis of certain standards, certain controls, certain software, certain actions that which are defined under the law. You do those audit under those practices. You cannot, let's take a company which is turnover of 50 billion. How can you expect an auditor to go to each line item or to check each expenditure or revenue is concerned? So to maintain a professional skepticism is there in the law. I think government is the right thing, he would have put this thing, but I think it stretches the definition too much. And I think if you dump the data, which you rightly said in the big conglomerate, yes, it's a very humongous challenge to analyze that data and to come to the right conclusion. So my thought is this, stretching it is too much actually. Auditor is supposed to do a true and fair view, is to opine that. He's a watchdog. He's not a bloodhound. So if he does follow all the practices, all the controls or everything, I think he should not be held guilty till it is really proved in the way he has abused the position, he was participated in the fraud. Then he should be held guilty and be punished as per the law.
Point very well taken. I'll take this to Signil Satpathy from Saraf and Partners. Could you share with us what concerns does this raise as far as the auditor's responsibility is concerned? Because as Mr. Rakesh Nangia said, you can't turn the auditors into a bloodhound. And sometimes they say too much scrutiny is never good. Because, in the end, the businessmen also want to do business for their own good. They wouldn't admit, not all promoters want to do frauds day in and day out. Is it too much suspicion on the business community? Can you dispassionately analyze this?
Yeah, Tarun, I mean, it's a very valid point that you raise, and I wanted to speak about it a little bit. One of the things to bear in mind is that if you look at this circular, one of the things that they very clearly articulate is that it's a mandatory obligation of the statutory auditor to report any transaction that they have reason to believe is fraudulent, right? And the word reason to believe is a very dangerous word, because the moment you have reason to believe, that essentially means that you are putting a judgment call on a statutory auditor, which may differ from one particular auditor to another particular auditor. My apprehension is that, because of these onerous obligations that are being placed on the auditors, you would soon see that, the responsible big ticket name auditors are refusing to sort of audit companies, and you will have your mom and pop shops who would go and become statutory auditors. So what you essentially tried to prevent, and you wanted to make it a more transparent disclosure-based system, you are now actually removing those transparent players and getting smaller players into the market who would then essentially not be as compliant as, say, your Big Four or any other, large statutory auditors that we see. That's my first concern. The second issue that you should also bear in mind is that, if you are required to report any transaction, right, and that's an obligation that is being placed, which you believe is suspicious, you are essentially informing the market of an information which may or may not be true. In publicly listed companies, think of the effect of stock price for such disclosures being made. Now, the Indian investor is not a very sophisticated investor. I mean, you leave aside the mutual funds and you leave aside the institutional investors. You have a very large retail investors currently who are putting in money in the market. If they start reacting to every such reporting of, what could potentially may not be actually a successful conviction of fraud, but merely is being reported because it's suspicious, you are essentially looking at a rabbit hole where stock prices are going to fluctuate like anything, which is never good for a stable economy. And the third thing is that, the Indian government places so much of emphasis on ease of doing business, right? We want to have a great rank. Ease of doing business is not just ensuring that you have quicker approvals or the licensing regime is going down. It's also to make sure that the compliance norms are, streamlined, to make sure that they are not cumbersome. Now, both Mr. Ravi and Mr. Rakesh have very clearly articulated from an auditor's perspective that they believe that this is an extremely onerous obligation, and which essentially means that not just from the auditor's perspective, but even from the company's perspective, imagine the cost that they will have to incur to provide the data which a statutory auditor will now ask, because you are now you are not removing the thin line between what is a forensic audit and what is a statutory audit. So it is incumbent upon the statutory auditors to look into each and every issue and not just rely on statement of the management. And because you are now not going to rely on the statement of management, that essentially means you are telling the promoters and the businessmen of this country that we believe you're all fraudsters, and it is upon the statutory auditors to now say whether you are a fraudster or not. That, I think, is the most unfortunate thing to come out of this entire issue.
Okay. Point well articulated. Now we'll move on to our closing comments. These can be a bit detailed in a minute or two. I'll go to Mr. S. Ravi from Ravi Rajan and Company for his closing comment for today.
So first of all, we have articulated about the pros and cons of this circular. It will be the endeavor of each one of us in the society to see that frauds don't happen. But this is a real world. Such online frauds do happen. You see in the banks also. And you come to know after 6 months or 1 year. So what I'm trying to say is the materiality of the fraud, which will affect the true and fair statement, that should come in. The circular should be further refined to state the materiality. Second, the institute must engage with NFRA to make a SOP so that the auditors have a guideline how to approach this subject, because it's very, very subjective at this point. The third point that I want to make is this guideline also needs to put responsibility on the management, because fraud, the company is run by the management. The company is not run by the auditors. The auditors only look at the books, and the books are based on sample checks. It's not possible, as Mr. Nangia mentioned, a big company, it's not possible to do 100% check. I mean, it's not possible. And there are high risk, low risk and medium risk items. And the auditors focus on the high risk areas. So it is not possible. So I think there needs to be clarity here. And it will be in the interest of everybody so as there is no ambiguity. It is important that this circular, along with the Institute of Chartered Accountants, must clarify the further steps in this. Otherwise, there will be chaos as far as we are all concerned. There will be interpretation issues, and I think this needs to be sorted out.
Okay, point very well taken. We'll take up more in the upcoming discussion. We'll go to Rakesh Nangia for his final comment.
Tarun, two dangerous things which I left it for the end, and they're dangerous, which we have not touched upon right now. The biggest dangerous thing which is coming out of this circular is this. It says that a statutory auditor shall exercise his professional skepticism while evaluating fraud and need not be influenced by the legal opinion provided by the company or its management. This is the most dangerous thing. Now, what happens when you're doing an audit, you look for the specialized consultant. I'm doing an audit. I rely on opinion coming from a law firm because it's a legal issue. I am not a competent person. I rely on that opinion. There's a valuation. A valuer gives me a valuation. I recognize the valuation because he's an expert. I'm not a value person who do the valuation of building a plant or machinery. There may be global structures. There may be consulting companies, actually. They give the opinion, and we take those opinion on the record while auditing the accounts. because it is coming from a reliable source. We can go through that, but we are not the competent people to go into where the shoes are for them and decide if it's legally correct or not. A law firm is supposed to give me this opinion. Now, if I'm not supposed to be influenced by the legal opinion, how do I conclude it? Whom do I rely on it where I'm not a competent person? There could be so many issues, so many legal consultants, so many legal opinions flying here or there, litigation, contingent liabilities, tax liabilities, Supreme Court cases pending there. You all move on the basis of the legal opinion. I'm supposed to rely, I'm supposed to disclose. I give a fair cognizance to that. And now you tell me I'm not going to get influenced. If I get influenced, and something happens to the company, then it's gone. If my legal opinion is denounced, is rejected, this legal opinion is wrong, you have wrongly relied, where do we go? Whom do you trust? Where do I conclude the audit from? I think this part is very, very, my humble request is this. As auditor, I'm not a competent person to do these things. I have to rely on the legal process. Second part, which is the genesis of this circular, is this, and why it came because of the Supreme Court judgment. If a fraud has been detected and the auditor subsequently resigns, it will not absolve him from the mistake if he have done earlier when he was auditor. A subsequent action of resignation does not absolve him. He will continue to be liable and accountable if a fraud is detected. That was one of the genesis which the court has clarified, relying on the Supreme Court judgment on this matter. But my first part is a more dangerous, threatening part on the audit fit entity is concerned. If you don't get some sort of amnesia, how to do the audit if I don't rely on an expert?
Point very well taken. I'll go to Signil Satpathy for his closing comment.
Yeah, thanks, Tarun. I think, I think the first important point to make here is that I think none of us over here are questioning the principle with which this circular has been issued, right? If there is a fraud, it has to be notified. I think that is very clear. I think the biggest challenge and problem that we are currently facing along with the auditors is that there is a lack of a standard operating procedure as to how to go about this reporting and understanding what exactly does an auditor need to do, what are their obligations. All through, the auditors have agreed or have developed a way of working. I think Mr. Nangia was mentioning, and which I wanted to mention, where they evaluated transactions on the basis of certain statements made by the management, on the basis of certain reports issued by the valuers, on the basis of legal opinions. And now to unravel that and expect that the scope of their audit includes and incorporates such technical professional opinion is unfair on the auditors. The second aspect to also bear in mind is that statutory auditors over the years have actually been given more and more responsibility, be it, certifying in the terms of FDI policy that a company is FDI compliant, or certifying that the transactions with related parties are all in order. So what we are now seeing is that apart from the government's wish of looking into technical and specific instances where they want the statutory auditors to certify, they are now putting this holistic obligation on them that forget about all of those. You should also make sure that none of the transactions that have happened are fraudulent. And, it sort of ties into my previous point that what is fraud is a very, very technical legal analysis that needs to happen. It's not as simple as saying that, oh, I'm not certain whether these two related parties, the transaction that has happened is suspicious. That's not the definition of fraud. If you go to a court, and that never stands to scrutiny. And if that is what is supposed to happen, then tomorrow, what is it? How do you stop the company from suing the auditors for making a wrong judgment call? Because they had reason to believe, and that is something which we are struggling with. And we often have discussions with auditors of various companies where they ask us as law firm to provide opinions on different subject matters and on different issues where they are not clear as to what the interpretation of a particular provision of law should be or how it should be applied to a particular factual situation. If they are asked to disregard that opinion, then you are placing an onus on them which they are not able to be, they will never be able to discharge. And the last point I think that we should all bear in mind is that we are moving towards a society where I think the regulators have this belief that most promoters in this country are not operating within the four corners of law. Be it the amendments in LODR, Tarun, where they have brought in such immense reporting requirements, immense shareholder approval requirements, where almost at the management and the governance structure of the company is now being run by shareholders. With this now, the statutory auditors now exercising this sort of power, you're essentially telling the management that each and every decision that you take could be questioned. And, India is now gone at so 20 or 30 years back, most large conglomerates in India were family owned, right? So you had a lot of interstate dealing. Increasingly, we are seeing that is going down. We have we have companies which are now more professionally managed, and their directors are often not, executive directors. They are not family appointed persons. They are now actually scared to take decisions lest it be questioned on the grounds of fraud, whereas it could just be a commercial decision that they have taken. Now, to question a decision which has gone wrong as not being bona fide is a problem that we need to address.
Point very well taken. Anybody wanted to say, because we're almost closing now?
I can simply want to add one line here, what Mr. Satpathy said. None of us are against fraud. If it's fraud, is that you're liable and accountable and responsible. I think there's a unanimous opinion. But we only want the impact of an acquittal later on, which you, Tarun, mentioned and Mr. Satpathy mentioned, what happens, the damage it will do to the company when it's come to the public domain. I think, and you can tell you how many cases get acquitted and how many you get convict them. You see those ratios. It can have a damaging impact. That is only I want to add here.
Point where you take. Mr. Ravi, very quick comment before we close.
So all such circulars are welcome, but I think most important is how do we implement it and implement it in the right way so that all the stakeholders are benefited. And that is the prime reason for this discussion also, because at the end of it, we want the right things to happen. And I think the right reporting must take place, but I think the format has to be clear. And so that we do a judicious, job of, whatever we are doing. And I think that is the way, that's why this circular, along with the institute, they must relook at this whole thing so that the auditors are guided by NFRA. And there is no accountability for any reason which is, not there. So it's very difficult, but I think we got to be very clear that this circular needs to be more clearer and redefined.
Point very well taken. Today was a good discussion on the issue of the NFRA circular. We'd like to revisit this issue in a month's time to see where have we reached. There are concerns in the larger chartered accountants community, and of course this will be taken up by them, I'm sure, at the appropriate level. That's it for now, but I would like to thank Mr. S. Ravi, Mr. Rakesh Nangia, Mr. Snignil Satpathy for sparing time and joining us on this very, very relevant issue that concerns all promoters, companies, chartered accountants and the larger community, and also the whole business sentiment in India. Appreciate your joining us. Thank you so much.
Thank you so much. Thank you very much.
Thank you so much.
Thank you so much, Michael.